All right, so I think we'll go ahead and kick off. Welcome everyone to our webinar on impact investing, the next trillion. This is part of a webinar series that the Oxford Said Business School runs from the Executive Education Department. As part of our executive education offering, we run 4 impact finance focused courses. We'll be speaking about them a little bit more later in the session. My name is Aunnie Patton Power. I'm an associate fellow here at Said and the program director of the Impact Finance Innovations course. I'm going to be your host today for this incredible conversation on the future of impact investing. I've been in the impact investing space for nearly 14 years, and I specialize in creating more impactful, inclusive structures, processes, and incentives. I'm just going to be completely honest with you. We're not going to have a lot of time for questions today. We have 4 incredible speakers that I have given an almost impossible job of trying to sum up their thoughts in 10 minutes. And we're hopefully going to have a little bit of time at the end to have a bit of a conversation amongst us. So instead of putting your questions in the chat, you can reach out to our speakers with individual questions. But also I would ask actually that you put some of your thoughts in the chat around what you think the future of impact investing is. I will make time to read some of these out, and we can include some of them with your permission in follow-up mails and social media around what you think the future of impact investing is. This talk will be recorded and the link will be sent out along with the slides that the speakers have given us permission to share with all of you. So let's get going. In 2022, the Global Impact Investing Network estimated that impact investing market was over $1 trillion for the first time. It took approximately 15 years from coining the term in 2007 to hit that $1 trillion milestone. The question that this webinar is asking is, what will that next $1 trillion of impact investing look like? How do we build for scale while ensuring impact integrity? How do we access the deep pockets of public capital markets while ensuring local communities still have a voice? What is the role of government, of corporates, of traditional financial institutions, of technology? And really just answering those questions of what will the future look like? We have 4 extremely experienced and insightful speakers joining us today to opine on this topic. I am very thankful that all of them took time to do so. Anthony is going to start out, was in the room where it happened at Bellagio when the term was coined in 2007 and has literally written the book on impact investing. I will put a link in the chat later to that book. His depth of knowledge around the history of the space, I believe, is only matched by his insight about where we are headed. Ami was the first person I ever spoke to about impact investing in 2009. And I will be forever grateful for her patience with my limited understanding at the time. She has been allocating impact capital since 2005. And now runs Elevar Equity, which is a fund that has democratized essential products and services for over 40 million households. She is by far one of the most thoughtful people I have ever met in impact. Krim is one of the world's most foremost experts on IMM and impact strategy. And he is my preferred partner in crime for research, teaching, brainstorming, and general disruption. He's a critical voice in the development of the impact investing market, and I truly appreciate his insights, which is why he's here today. And finally, certainly, but definitely not least, Morgan Simon has been blazing a trail around using capital for social justice for almost 20 years. And she is someone that I deeply admire for her authenticity and her conviction around what impact investing could be, not necessarily what it is. She's also written a really engaging book around how capital can be used for real impact. I'll put that link in the chat as well. Now, as I said, I have given these 4 speakers an almost impossible task of asking them to answer a huge question in 10 minutes. So they're each going to be presenting a slide or 2 to help them answer this question. I'm going to be pretty strict on time to see if we can get some time at the end to have a bit of a conversation, but I will let them go a minute or 2 over if they need to. So without further ado, Anthony, I'm going to put your slide up on the screen and hand the mic over to you.
Great. Thanks so much. And really appreciate everyone spending the time with us today. I know I'm really looking forward to learning from the other panelists as well. And, I don't take for granted that you all want to be doing this work. It's incredible having been doing this for more than 15 years to see the interest that people have. And I hope that for some of you, it's a complete banality that you're going to be sitting here talking about impact investing. For those of us who worked really hard to make that happen, it's something we don't take for granted. So really appreciate all the energy you all bring in from wherever you sit. I know that you can make a huge difference in this market. We started this work in the early 2000s. We coined the phrase impact investing in 2007. I think one of the big shifts for us was realizing that it's not just about building products or moving money, it's about creating a movement. And I know Morgan and others can really talk more about that than I can. But what that means to me is no matter where you sit, you can be a part of bending the arc of this future that we're talking about. So I think we're going to talk about where we think things are headed, but I know that each of you can really make a difference in changing what happens. And so for the purposes of my contribution, I do start from the point of what the Global Impact Investing Network said in their blueprint, their roadmap for the future of impact investing, which is that we need to figure out how to scale with integrity. So when you talk about what the next trillion, and I'll actually get into why I don't like that phrasing, don't mean to create controversy, but when we talk about the next movement of impact investing and where it's going, this idea of how do we balance the need to scale, not for the purposes of moving money, but for the purpose of solving social and environmental challenges, and doing it with real integrity. I think they got it right when they summed up their 200-page report based on 350 interviews with those 3 words. So, when I think about what's going to happen and what I don't have solutions. I know what needs to happen. I don't know how we're going to get there, and that's what I hope the other panelists and many of you on this call will be able to figure out. But really, I think 5 things need to change from where we've been to where we're going. So, on the column here, we have where we are, and then the column on the right is where we need to go. So just really quickly, for the sake of time, I think first of all, and many of us have been saying this for a long time, what do we focus on? And when I say we, I mean we as a broad impact investing movement. We really need to move from focusing on what gets announced to what difference actually gets made. I think we are prone to losing some of the integrity and scaling with integrity when we celebrate the announcements that get made and don't hold people accountable to what actually happens. At a minimum, if we hear about the $200 million fund this or the 300 million pound initiative that, and don't even follow up to see if the money was dispersed, yet alone what difference has that money made. So I think all of this to me is around a broader theme about a need in this movement for the owners of capital to have greater discernment about what difference their money is making. That to me is both the greatest opportunity for the impact investing movement over the next decade, as well as the greatest threat. If 10 years from now, we look back at this webinar and say, we've been incredibly disappointed by what's happened in terms of the inability of our movement to achieve its promises, I believe that what we will come to look back on was the fact that the owners of capital did not show the necessary discernment to make sure that their money was being put to work in ways that truly made impact. That to me is the greatest threat for impact investing. And so how do we overcome that challenge, and how do we face that threat head on? First of all, don't focus on what gets announced, focus on what actually happens, the difference that gets made. Related to that, and this is why I sort of half jokingly I would say I don't think the question of where does the next trillion comes from is the right question. Aunnie, when you introduced Elevar and Ami's work, you said they've touched 40 million lives. And I think that's a better metric for, when we coined the phrase impact investing in 2007, we consciously said we do not want the success of this movement or industry to be counted in the dollars moved. We want it to be counted in the challenges socially and environmentally that we have addressed. And so I think we make a mistake when we keep score based on AUM. And I realize that Jen put out the $1 trillion number, and that's something that people can organize around. We really need to move from organizing around dollars deployed to really organizing around people's lives changed, environmental issues that are addressed. Ultimately, the impacts we care about and putting impact back into impact investing is key, in my view, to scaling with integrity. The third question, which is an open question, is who gets to invest this money? So if asset owners are going to have more discernment and put money in the hands of people who can really make impact at scale with integrity, is it going to be the large existing legacy investment firms who are effectively retrofitting impact onto their practice? And I suspect some of you probably, hopefully, work for some of these firms, and you are doing amazing work, genuinely trying to move your company or your firm to be more focused on impact. There are also a group of organizations like Elevar and others who I would call impact natives, firms that were built from the beginning to have integrity. I think where we've come from in the last decade is a lot of these firms have deep integrity, but they haven't scaled. And the people who are raising billion-dollar funds, multi-billion-dollar funds, putting huge amounts of money to work are the legacy firms. And so what would happen if we actually got scale among the impact natives? I think it would challenge us in entirely new ways. And I think it's an open-ended question as to how effectively you can retrofit impact onto a platform that was built for something else. Again, I think we need both if we're going to have the scaling piece of scaling with integrity, but a future in which some of the impact native firms also achieve scale will be a very interesting one that I think will push the frontiers of our practice forward. The fourth point, and we talk a lot about impact measurement. I think Karim will probably talk more about this, but we are currently at a point where impact reporting and management is voluntary, uncoordinated. We all know that, fragmented. I believe that government and working alongside government has a very important role to play in creating an impact management regime that really does hold people accountable. We shouldn't be producing audited, legally binding financial reports to our government regulators on one hand, and then turning around and creating glossy impact reports that don't have the same accountability as a separate endeavor, which is what almost everyone here does. As an example, I think we really need to be embedding impact in a much more meaningful way into what gets regulated. And so that whole, I think how we run toward government rather than away from government as an impact investing movement will be central. I think impact investing, and I've said this before, especially those of you from the US who spend your time in Northern California will admit that for many people, impact investing was somewhat born out of a libertarian anti-government streak. The idea that we do want to solve social problems, but we don't believe that government is an effective partner. I think that's a mistake, and the future of impact investing will really rest on how well we work with our governments, especially embracing the idea of democratic accountability, where that is possible, or at a minimum, working alongside the better parts of governments to make our investing capital be a partner to them in helping to realize the ambitions that their people have for their societies, rather than thinking of ourselves as somehow a way to work around and against government. And then finally, and something that I work a lot on at the Lafayette Square Foundation, is the question of how we as investors can support the well-being of the workers and the companies we invest in. I think for most of us, workers have been seen as a means to ultimately achieving the impacts we care about, whether that's an impact on an environmental outcome, a product and service we want to deliver to a family that didn't have access to it before. We've seen workers as means at best, and I think often have completely ignored them as a constituent in our impact investing work. I think that's a mistake, and especially with the upcoming disruptions that AI is going to create in the workforce, our ability as an impact investing movement to be able to talk about how our efforts also support the well-being of workers is going to be incredibly powerful and important, because I think that's where a lot of the political conversation is going to be around investments in general. And if we can be front-footed as impact investors and offer a coherent and credible way that we as investors are supporting workers, not only creating better products and services for the ultimate customers, it'll position our movement to have a much more central role to play in how our societies evolve. So again, I don't know how any of this is going to happen. I know that it all has to happen, and look forward to hearing from the other panelists about what you guys see and whether any of this makes sense. If it does make sense, what can we do collectively on this call and in the systems that we influence to help this come about?
Excellent, thank you. And you wouldn't be a good disruptive panelist if you didn't argue with the prompt, Anthony. So I appreciate that. I may have done it to others in the past too. So you can only, what goes around comes around, right? Next up, we've got Ami, who's going to talk about her views. Here we go. Ami, got your slide right here.
Great. Thank you, Aunnie. Great comments, Anthony. It's really, I think about the industry and how far we've come. And when Aunnie posed this question to me, I sort of had to rack my brain to think about what we could say that's really going to shift things, and what I'm hoping happens over the next few years. So for me, I really think that we need to continue to push boundaries and come up with creative and innovative ways to transform capital markets and the way that we've built our systems and our thinking and how we align our capital with returns, and sometimes asking the question, how much money is enough money, when it comes to wealth creation and how we distribute that wealth creation amongst the many on the planet. And so I started off by thinking, is 1 trillion enough? And it's not even a drop in the bucket. If we think about the number of Fortune 500 companies that have this as their AUM, or some of them have it as cash. And so you think of the scope of the industry and all of the efforts that we're putting in relative to the larger capital markets. How do we get into that system in a more formal, constructive way that aligns? Also being in the space, I realized like the SDG goals were originally developed for the rest of the world, for more developing countries where we really needed to uplift people out of poverty. It's now become a more global phenomenon, but someone who's spent the last 20 years in emerging markets, what we need annually is about 4 trillion to start making a dent in some of these SDG goals, and only about 8% of the 1 trillion right now is targeting rest of world. And as an investor in India and Latin America, this is nothing relative to the scale and the amount of people that we need to touch. So not going to be doomsday, because we still have made some really great strides along the way. So, we've spent a lot of time debating what it means to measure, how to measure, influencing some of the regulations. The SFDR regulation in Europe is coming. And it's a little messy right now, but messy's good to get to a really nice product that I'm hoping will come out in a couple of years. It'll be systemized and speak to some of what Anthony was saying about formalizing and requiring reporting. And I think the SEC is right behind them. We've added lenses to our investing. So impact investing was the first lens, and now we're diving deeper into that with DEI, with gender. We're just involved with a child-focused lens as well. So we're continuing to push the boundaries on how to be inclusive of the different kinds of groups that are not represented or don't have as large of a voice. There are more investors asking about ESG and impact, so that's putting influence on allocators on what they need to think about. And we're starting the discussions around alignment, and even Aunnie and I still continue to debate what that means from a GPRI perspective and how that will look. So then when we think about what needs to happen going forward, I think that we need to run faster. We have a lot of problems that need to be solved, and solutions need to be tested, and we don't need to be perfect. So analysis paralysis is definitely something that a lot of people may get stuck in, and we really need to get people out of that. So we need to shift conversations from the why we want to do impact or the what is the impact. I think we've spent enough time in the industry. We need to move that conversation forward to this is how you do it. There's enough proof points across the various asset classes. There's enough managers and allocators that can share stories and amplify their voices and really get more into the how, so we can get that capital engine moving faster. I think what's important though is keeping innovation at the center and ensuring that we're building up from the customer at the center. So what I mean by that is a little bit of an extension of the L of our philosophy is we build businesses with the customer's voice, need, and aspirations at the core. And I think more of the industry needs to follow that. And it can be extended to the planet, it could be extended to communities. But if we're not designing for what's needed, then we're constantly going to be pushing business models that are not going to be inclusive and getting to that, purpose-driven institutions that we're hoping for. There's been a lot of discussions around management, and I'm sure Kareem will will add a lot of commentary here, but from our lens as an impact native firm, we have been asked to be more form on top of our substance for the benefit of the industry. And there is an understanding of why that's important. And I think we need to, as people that have been in the space, lead with that form. But I get nervous that people that are coming into the impact space that have created institutions that haven't been aligned with an impact thesis now come with form and there is no substance behind it. And so I think, how do we make sure that what people are saying in a really nicey glossy report is actually the impact that's created? But more importantly, from a holistic perspective, is everyone that's working within that institution aligned with that thesis? Is it just a few, or is it the whole company, whole institution, whole group? And I think this is something that really we need to see more activity and more substance around it. And I think that will then create more purpose-driven institutions in the market. A lot of the impact space started in the alternative space with a lot of venture funds and a lot of early stage capital, because we were taking risk, we were meeting needs that were not being met, we were investing in white spaces that hadn't been touched yet. Now some of us are 10 years in, we've got a great portfolio of assets that need triple amount of capital. So I think of that as all of the trillion that has been named by the GIN as contributors to purpose-driven institutions, corralling more people to come into the industry. But what we want to see from these purpose-driven institutions is more capital coming to them and allowing them to lead the pace, as those that are converting into impact can sort of learn from. So it's not one way or the other, but it really, you build an institution from the very beginning with the ethos and the DNA of creating impact, not adding the ethos and the DNA of creating impact. And I think that it's a nuance, and I think we need to double click on this, but I think this is what's going to transform capitalism and maybe push the boundaries on how we've always been thinking about what is right and wrong. And the biggest risk here is this, if this doesn't gain momentum, is that we may repeat some of the mistakes of the past because we end up playing too much of the established game and not changing the rules or not changing the frameworks, with giving purpose-driven institutions a larger voice on a platform. So how do we get there, and how does that transformation happen? And I think this gets into my last 2 points, which is around accountability and incentives. So the debate and the request of the industry is that managers in the impact space have to outperform. We need to generate a significant amount of alpha. We need to ensure that we create market rate returns, depending on where you sit on the spectrum of capital deployment. And there's always been a conversation around we have very little room to make mistakes because we have such higher stakes in the game. And I think that's fine. And a lot of us have stepped up to this demand, but I think the accountability needs to sit not just with the managers, but also with the allocators. So if you've got a greater number of investors coming in and asking about ESG and impact, how are we ensuring that both the managers of this capital and the allocators of this capital are aligned for the long-term benefit of creating impact that's sustainable and equitable? And the reality is, incentive structures have to change on both sides. And it's really the only way to move the needle. There are archaic systems within large financial institutions getting everybody on board, and incentive structures have been built in a certain way for a very long time. So I think the biggest shift, fundamental shift that we can create to really challenge capital markets is to change the way people are incentivized and not fall back on just the altruism of creating better impact and wanting a better world. I think that's nice to have, but if we really want to change the systems, we really have to think about what incentives will look like. So I leave some of these thoughts with you. I think all of them could go on for a few hours, maybe a week, to figure out what the action plan would be. But this is what I think some of the key points are for taking us into the next
Excellent. Thank you, Ami. And I, as you know, completely agree with you. I will be sharing a couple of links in the chat as we go now, are ways that you can contribute, those of you on the call, to changing incentives, which is what Karim is going to discuss now as well. Thank you, Ami. Karim, can I hand over to you?
Thanks, Aunnie. And it's great to be here. I'm going to just run through a few slides and build on both what Anthony and Ami have said. And I think the flow is actually quite fun to just see it come together in this way. So I'm just going to turn off my video as we get into the slides and build on what others have said by just saying that the next trillion, I think, is all about realizing impact. As others have talked about already, for the last 15 years or so, we've been talking about intentions. We've built a lot of infrastructure. We've moved capital, and we've made a lot of progress on impact measurement and management, IMM. And so I think it's about taking all of that in terms of the IMM fundamentals and tools, bringing both the technical aspect of impact measurement, but also, as I'll explain, the behavioral and the relational aspect to be able to demonstrate greater value to all stakeholders. I think we have to do that in 3 different ways: by focusing on alignment, incentives, and integrity. And it's nice to see that everybody else who's come before me has touched on these 3 themes as well. I'll just draw your attention to the graphic on the right, which comes from a great publication called the Impact Stack, where you can see that over the last 15 years, we've made a lot of progress on what are these questions that we're asking around impact. How do we measure? What are the different approaches and tools that we could use? What are the starting points and kind of fundamental building blocks? And so I think a lot of that already exists. Now our challenge and our opportunity is, in fact, to take that to the next level and be able to realize the potential. And I'm going to talk about these 3 themes in order. I'm starting with alignment. And so when I talk about alignment, for a long time, the industry has been focused on this question of trade-offs. And I think that's actually the wrong question when it comes to impact, because increasingly what we're trying to do is get better alignment between all parts of the capital chain. As both Anthony and Ami have already said, as an example, between investors, how do you get GPs and LPs to align more clearly around not only intent, but also the integration of impact practices? We're seeing that happen through the operating principles for impact management, as well as the newer SDG standards, which focus not only on reporting, disclosure, principles, but really around decision-making, around transparency, and around governance. And these are terms that are going to come up, I think, much more regularly and will become much more important. We're moving from this concept of disclosure, measurement, reporting to management, value add, and integrity. And we did some work last year around asking both enterprises as well as investors, we have all these tools and approaches, and it should be relatively easy for everyone to just start measuring what's getting in the way. And surprisingly, it wasn't technical issues. For the most part, it was actually behavioral and relational. We saw that there were often mismatches or misalignments between different parts of the capital chain around how they understood what impact is, what are the expectations for impact performance and approaches, as well as what good data and decision-making looks like. And so one of the things that I hope we'll be able to get better alignment around, or certainly less misalignment around, is the expectations and approaches that are commensurate with the type of capital, the type of business model, and the type of stakeholder. And if you're interested, we have more tools and approaches listed here at IMM Journey. So I think getting more alignment and better alignment is key to getting to the next trillion. The second part is around incentives, and Ami's already spoken about this. We need better linkages between and integration between financial data and impact data, financial returns and impact returns, not only to mitigate impact risk, but also to more directly address these behavioral aspects of IMM. Two examples here, one from the Impact Linked Finance Fund, where I'm on the supervisory board of. We're seeing many examples now of how impact linked capital can be applied across different types of sectors and issues, even those that have not been traditionally accounted for in impact, but also those that have been in some new ways using new structures and capital types. We're really trying to get at this issue of how capital can be additional, how it can be in service of delivering impact, and how it can change some of the existing power structures and norms more in line with being able to ensure that the benefits of impact capital accrue to multiple stakeholders across the capital chain. Similarly, some of the research that Aunnie has been leading with a broader team around impact-linked compensation, which we'll share in the chat. We've seen a lot of interest from fund managers around how do you get tighter linkages between impact returns and financial returns. All of this is super important because it helps influence not only when and how we measure, but to be able to connect the dots between outputs and outcomes, to course correct more easily and efficiently beyond just what reporting and disclosure can do, but of course, to reward outsized impact performance. And so when we talk about incentives, it's to acknowledge that a lot of impact measurement is in service of having more impact. And also we want to reward both the upside and protect some of the potential downside or mitigate some of the impact risk. And then the final piece I'll talk about is around integrity. Now, this is a phrase that we're using much more in the space, which is actually a really good thing. And I think there are ways that we need to unpack it. Because on one hand, we need more impact integrity, not only to build trust in the claims around impact and impact reports in order to avoid impact washing, but also provide accountability for real world outcomes and demonstrate additionality. What this means is that all of the capital that we're moving has to really result in real world outcomes that people can see, feel, and be part of. I think what this is going to look like is that impact verification, which we're now seeing much more around, particularly around practices. For example, the work that Bluemark and others have been doing, which is bringing much more transparency and consistency around impact practice. This would be the default for any impact investor. I think we have to go further than that, though, when we think about integrity, because we have to really understand how we translate impact data. And there's a lot more data now that we're dealing with. How does that get translated into the kind of data that we see in reports in aggregated forms? We don't often know where the story of data started and then how it ended up in the public domain. And so getting better around source data analysis and looking at the integrity of translation of this data is going to be key. And then the second piece around integrity is of comparisons. There's a lot of work happening around how do we think about thresholds or comparisons, not just the classic benchmarking, but really asking, for example, stakeholders. The work that 60 Decibels has done recently of looking at stakeholder-informed benchmarks is super interesting because we can begin to drill down in ways that stakeholders tell us is important to them, rather than just trying to necessarily find objective measures that may have very little to do with changing people's lives. I think an important part of that comes down to governance, and it's a part of work that I think we are just beginning to grapple with, not only because of the regulatory piece around SFDR and others, but because boards and investment committees are becoming increasingly accountable for impact performance, not just addressing negative effects, but really thinking about the ways in which they can be proactive around impact upside and mitigating impact downside. Group of us around Mondial Impact have been seeing that boards get stuck on certain issues around looking at culture, people, performance, but also we're seeing a lot of good examples where boards are stepping up, bringing new skill sets, and thinking about what decision-making and accountability looks like alongside reporting and risk management. And so in summary, I think the next trillion is about demonstrating the realized impact from impact investing that we can see and feel much more tangibly. It's about raising the bar on impact practice and performance and translating that into value add from IMM. And this is going to require a lot of collective leadership and action, but I'm quite optimistic because as we've seen, there's already a lot happening. So I'll hand it over now to Aunnie. Thanks.
Wow, Karim, that was exceptional. Thank you so much. And I am super pleased to have us finish off with Morgan, who is going to share her own slides. And I will hand it over to you, Morgan.
Thank you. Just going to do the screen share here. We can all see my slides?
All good.
Fantastic. Okay, great. Well, I just wanted to give a little bit of context in terms of who is speaking, in terms of what's our perspective. So I've actually now been doing Impact for over 20 years. And the last decade of that has been leading a registered investment advisory Candide group that works with families and foundations that want their money working for justice. Okay, let's see about advancing these. There we go. We've over that time contributed 200 million to the trillion. So from that perspective, we're a relatively small player, but with a really strong emphasis on private markets, mostly equity and debt, both directs and funds, and really kind of working broadly across the social change spectrum. And within that, I wanted to start a little bit more broadly in terms of what impact investment had been designed to do, and essentially what are some of the elements that we're looking to correct. The idea that wealth has been globally extracted and that structural, racial, and gender inequities wind up being manifested in the way that we see that distribution of wealth and where extracted capital has landed. And then we exist in a market that traditionally has had this short-term focus to maximize shareholder returns at all costs. And that has meant that finance has traditionally been this tool of pain and trauma. And the idea that we want to really address that and move it into a different light requires pretty comprehensive approaches from both an economic and a political perspective. So we have a big task on our hands, essentially, is what it comes down to. And that's part of, whether it's 4 trillion or I would argue the whole economy, right, that we really need to see money work in a different way to be able to move forward. And this is part of why when we think about what impact investing was originally designed to do, we wanted to solve some of the main challenges of philanthropy. Some people may have seen, there was a great book about 15 years back called The Revolution Will Not Be Funded. The idea that it's very difficult to get wealthy people to fund innovations that might topple their wealth. The fact that foundations are often working at cross purposes, right? That if they're doing charitable giving with 5% of their assets a year, and then 95% of that is working counter to their mission, you're in this nonstop David and Goliath fight that you just can't win. And that essentially the economy is really where most of activity is happening, right? That the philanthropic sector is such a small portion of that, that if we don't fix the way the economy works in general, rather than trying to clean up the messes essentially that have been created by the economy, that we can really start by building a stronger economy. And that means that with impact investing, we typically had 2 main strategies. The first of dealing with the world as it is, often engaging in public markets, of knowing if I care about workers' rights, I need to address Walmart's role in the economy, or if I care about fossil fuels and climate change, then I need to be looking at public companies and I need to be looking at the banks that finance them. So that can be one major area of work. And then the second of how do we build the world that we want to see, right? Which is essentially looking at economic actors. Typically, we find this is with new companies and funds that are really looking to shift the way that money is working in society. So as we started to go out on this endeavor to really try to bring this new way of looking at social change, I think as an industry, there were 3 main questions that the first trillion did a great job of answering. So the first was that originally, way back in the beginning of impact investing, there was a first major report put out by a major bank, and we were thrilled to see kind of that attention and mainstreaming. But the name of that report was Impact Investing in Emerging Asset Class. And a bunch of us were like, no, the whole point is that you can do this with 100% of your assets, that this is an approach that can be applied to any type of investments that you might want to do. I think that is something that we have very much been able to address over this first trillion. We've shown that it can scale. I think there was really a question as to whether it was going to be really niche social enterprises. This also goes back to the multi-asset class, larger strategies, that there was so much room within markets and economic activity to be able to do this work. And then finally, would it be market rate? That was this going to be considered just a philanthropic strategy, or could we actually achieve the broader financial objectives that people might have through this work? I think over time, what we're starting to question too is this idea of, is market rate the right bar? That if the traditional market is where we lock up people for profit and where we burn fossil fuels, is that how we want to define the market? Or is there potentially a different starting place? So we tend to talk about realistic returns at Candide, the idea of what should a project reasonably be producing for investors if it doesn't want to be extractive to people or the environment. So at any rate, I think it's important to note that these questions that we focused on as an industry were fundamentally financial in nature, that was really kind of the first proof point that I think we really did need to go through that phase to kind of grow into a legitimate industry. But I think as some folks have been noting kind of in the questions, the idea of impact, when you look at the Merriam-Webster definition of that, to impinge upon especially forcefully, that's not always good, right? And it's up to us as imperfect human beings to figure out what that impact is going to be. And that's part of where sometimes the idea of touching people, right? Is that a light or a hard touch of what impact is actually being created, winds up being really critical. And I think my aspiration for the next trillion is that we start to get into what are the questions that will really drive impact. And if anything, that first trillion taught us was that we are really good as a sector when we put our minds on solving key questions. And this is where I really want to credit the opportunity publicly to credit a lot of the work that Anthony did in terms of really convening the sector and really showing that we could work together to even make impact investing a term. That was a hugely important body of work, and it showed that we can organize and we can get things done. So I'm really interested in how do we set questions for the future. And the first for me being who will set the agenda, that impact investing cannot just be wealthy white people, mostly American and European, making choices about what impact is going to be for other people. That's a lot of what we've seen in the sector. And I think we really need to take a hard look at ourselves of how do we make sure that we are diversifying not only kind of who are supposed to be the beneficiaries of impact investment, but who are the decision makers and whose skills are valued. So this is part of where there's often a really clear path. If you want to be an impact investor, go get your MBA, go work in consulting or in a major financial institution, and not always this clear path of what are the social set of skills that we need to bring to that and how do we really value that within our organizations. And then the final piece of knowing the incredible challenges that people are facing today, that the environment is facing, are we going to be content with gradual change, or are we willing to look at more transformative change and how that might mean replacing some of those historically extracted resources in a much more transformational way? So I want to end by just giving a quick example of how we at Candide have been kind of looking at one of these questions of the who will set the agenda question, and then want to also note that there's so many other great organizations that are really shifting that conversation, a number of whom we've had the privilege to invest in as well. So one of the things that we've done, we have two debt funds at Candide, one called Olamina, that's US Community Development, and another that's a climate justice fund that's just about to close in June. And in these funds, we have community advisory boards that are diverse groups that have lived experience and experience in their local communities in terms of working on these direct issues. And they have been a major part in terms of creating our governance structure and actually are the majority members of the investment committee. So we do have team members who are providing diligence and kind of doing the more traditional investment work. And just to show a little bit of how that flow works. But then the community advisory board is able to really start from the top of the funnel and being able to give their perspective on what is true impact, that it can't just be people from investment backgrounds sitting at a desk who are making that assessment, but how do we make sure we're being much more comprehensive in that? And then they ultimately get to be part of reviewing that final memo and making the decision. So that really kind of shifts who gets to have the power to allocate in a powerful way. So just to show who are some of the folks that are actually out there doing this work in the Olamina Fund and then in our Climate Justice Fund. And part of the reason I'm making sure to share their names and show their faces, the final kind of ethos that I'm hoping will come with us as an industry for the next trillion is this idea of nothing about us without us, right? Of how many times are we making choices for other people's lives and communities without having their voices at the table? I am hopeful that that can drive significant elements of impact investment practice and is likely to lead to very different outcomes for the next trillion. So I'll go ahead and stop there.
Wonderful. Thank you so much. I'll invite all of our panelists to come back on camera. I mean, I've all seen you speak before. I've all had conversations with all of you, but making you put that big of a question into 10 minutes really just created this 9 minutes, as Morgan just pointed out, created this just masterclass. And, you know, I think there's a real reason that I chose the four of you, and Krim and I have talked about this. We talked about this earlier today. And I think each of you reflected this in your comments, is that, you know, there has been a lot of focus in the industry on growing and on where we are and on becoming mainstream. And I think one of the things each the four of you have done is kind of to say, like, that's not necessarily where our focus should be. Anthony, to the point of, like, you know, just the provocation of, like, should we even be thinking about the next trillion? And so I think each of you have highlighted some very significant points about what will need to happen for there not just to be more impact investing dollars, but for there to be more impact. And I would just like to call out a couple of things from each of you, and then we'll have a little conversation. I think Anthony, just, you know, going back to kind of where did we start from and where do we want it to go, and like really thinking about how do we communicate that better? How do we think about workers? Those are things that like really stood out. You know, Ami, I think like just asking the question, is it enough? Is completely the right one, right? Like, it's not, and it's actually small, and actually we need to be thinking about, you know, how do we think about both growing it and also incentives, and you know, how does this actually structured? And Krim, I mean, your work on, you know, how do we think about the impact is so fundamental to us being able to do this correctly. And I think Morgan, I mean, you know, we're never going to get to the point where impact investing is just, unless there is the people around the table are making or have real power to be able to direct capital, which I completely agree with. So thank you for all of you on that. We've got a few minutes, but my first question for all of you is, there's a lot going on right now globally. Impact investing is, you know, a topic of conversation. A couple of you are in the US. Do you feel optimistic or pessimistic about where we're going in the near term? Anthony, do you want to start?
Yeah, it's fun. I'm laughing because we founded the Global Impact Investing Network in 2009, and we've got this amazing board now. And we started this many years ago. Just the board meetings start with people taking a few minutes to say, how is impact investing landing where you sit? And we have board members from India, Northern Europe, the UK, US. I mean, it's really an amazing privilege to sit through these sessions. And right before the pandemic, we had a meeting in London. I took the red eye. It was like this gorgeous day in the spring. I walked through Hyde Park. We were meeting at the head of what was then the UK sort of impact investing arm, you know, the old CDC. Anyway, so we were sitting in this meeting, and my fellow board members were incredibly excited. They said, "Look, this is Anthony. You should be so proud of everything that's happened." One of them said, "I can't go into any meeting with a Fortune 100 financial services CEO who doesn't want to talk about impact investing. I can't believe how this has been mainstream. This is so fantastic." And so that's optimistic. Then that, you know, this is now something that all the big financial services firms, and I don't fetishize them, but we cannot get to scale on behalf of the issues we're trying to solve if we do not engage in mainstream capital markets. I think a lot of us would love to see the mainstream capital markets upended and destroyed, but that's not going to happen. So they hold power, and they will hold power for our lifetimes. We have to engage them, and in many ways we have. So that's optimistic. All of them have to say something about impact investing in their annual letters. Most of them are creating multi-billion-dollar funds. They're responding to, in the private bank side, their wealthy clients ask for impact. So that's great. I then sat in the meeting and said, you know, it's nice for you guys to say that, but the world's burning. We hadn't even talked about the fact that many jobs could be disappearing in the next decade. That's like this month, right? And so we had this great debate about basically this question, Aunnie, like, should we be optimistic or pessimistic? And where we came out, I think this is still true, is we should be optimistic about the long-term trajectory and what the impact investing movement has catalyzed in the potential for all of us around this call to make a difference in our professional lifetimes. And it might not be quick enough. And that's kind of where we ended up. We decided, great. And one point I just want to make is, I genuinely believe that there are a lot of people who are truly committed, smart, hardworking, and genuinely committed to the kinds of changes that we talk about. And yet, if you simply stop listening to what people say and just observe their actions, we are far too incremental. And let's give you one very specific example. It's from the United States, but I think it's more, many of you will resonate elsewhere. There is, in the United States, depending on how you look at it, there's between 50 and $100 trillion of money that is managed by professionals on behalf of other people. That's our kind of professionally managed capital markets. And there's kind of some standard research that says 98.6% of all that money is managed by firms that are owned by white men. 98.6. And there are people out there who said, we want to change that. Part of our notion of impact investing is that the people, as Morgan said, that we need a much better representation of who actually ultimately makes investment decisions. We can't just be an impact investing movement that's led by elites on behalf of other people in a patronizing colonial sensibility. So there are people who genuinely are committed. And they have pledges, like there was the 25 by 25 pledge, 25% of our assets by 2025 will be in firms not owned by white men. Incredibly low bar because, not white men is 95% of humanity, but let's just start there. I think these people are genuine about it. But when you run the numbers on this, if you're even going to take that number down from 98.6 just to 78.6, so you'd still have 78.6 of the money invested in firms that are owned by white men. In order to do that, and if you take $50 trillion as the denominator, we would have to capitalize $100 billion new asset managers owned by people representative of global humanity who are not white men. Now, I think people genuinely are committed, many people, to that number. They say, doesn't seem crazy to get that number down to 78%. What are the actions people are taking to come even close to capitalizing $100 billion firm? So, if Elevar Equity said we're going to be a $100 billion firm, people would be like, oh, that's crazy, way too ambitious. You guys are nuts. Well, they need to make it. And then the next 99 firms need to make it who don't have their track record, don't have their kind of professional staff, don't have all the connections they have. So I think there's a disconnect between what I genuinely believe people want to do. And I think that's an analog. There are other parts of the world where you can say something else about climate, about whatever it is. I think people are genuinely committed to this change, and they have not, in their actions, actually plotted out what it would truly take to live up to what we claim is the change we want to make. So I think there's a disconnect between what I do believe is genuine and hopeful, in that people really are committed to doing things differently. But I don't look anywhere in the financial services sector and see actions that are even close to getting us onto the trajectory we need to get on. And that's, so I think I'm optimistic and pessimistic, but it's on everyone on this call to solve it. I don't know how we're going to solve this.
Morgan, I'd love your thoughts on that. I have to say, I echo Anthony. I just recently got back from a really cool set of events in Oslo, but around disruptors and everything. But I also, one of my takeaways was that the same thing, that people were, the changes that actually have to be made, i.e. like different fund structures, different people in power, different incentives. People are like, oh yeah, great. But slowly. It's like, no, that's not how we're going to get there. Morgan, I know you've probably been feeling this frustration for many, many years.
Yeah, I guess it's kind of funny to be I don't know if I would say an optimistic critic. But I think that, I don't have any particular affection for E.B. White, but I quite appreciate a quote of his, which is, I arise in the morning, let me get this correct. I rise in the morning torn between a desire to improve the world and a desire to enjoy the world. This makes it hard to plan the day. And that I just feel like life is such a beautiful, precious gift, and have a lot of, interests and dance and music and kind of other elements of life that I feel really grateful to be part of every day. And if we're going to be here on this earth, the idea of using our time to try to create space for everyone to have that autonomy and joy feels like a great way to spend my time. So I think it's less about being optimistic or pessimistic. We just have to do the work. I think that is the human condition. So from that perspective, I can see different things every day that either break my heart or inspire me. I think there's some pieces like in looking, I really appreciate the international audience here. And, looking how of the 10 largest funding rounds recently in Africa, only 2 actually involved Black Africans, right? That there's just been this unbelievable lack of local funding for entrepreneurs at a global perspective, and then community entrepreneurs in the US perspective. So there's a lot to be angry about. There's a lot to be pessimistic about. And at the same time, I think these are all kind of waves of progress. Someone had asked the question around the current attacks on ESG, right? I think that's also been kind of the scary phenomena. But there is that piece of, first they ignore you, then they fight you, then they laugh at you, then you win. And that in the context of movement building, seeing the backlash as just another phase in what it means to be gaining more recognition, right? That it means that you have amassed some power if people are trying to fight back against you. So that's where I don't think that the idea of optimism or pessimism is a linear path. That essentially we just need to continue to engage and ride the ups and downs and ultimately come back to our values. And for me, that's about creating autonomy for others and trying to do that in an accountable way as much as possible.
Excellent. Great. Yeah, Ami.
I agree wholeheartedly with what they've said. So I'm going to try to add slightly more optimism to this, because I think we're about to hit a tipping point for our next human revolution, right? If we think back to like the French Revolution or the American Revolution, it was like shifting moments in our history. And I feel like there is a lot of foundational groundwork that we have been putting down. And now there's 165 attendees on this call who may or may not be active impact people, but that's a lot of people that are on just this call. So the movement's growing and people are asking more questions. And so if we can just, like Morgan said, get the work done, then I think things will start to shift. Like it won't happen in a year, it won't happen in 5 years, but I really do believe there's a revolution coming, because we won't have any other choice but to survive, and survival is only with this kind of lens and this kind of alignment and thinking holistically about wealth, about sustainability, about a future that allows, a newborn today to have 90 years of life that isn't plagued with one crisis after another. And I think there is a generational shift that's happening. The younger generations are asking much tougher questions than I was asking when I was their age. I have a 10 and 12-year-old that are constantly poking at things and wondering and asking whys a lot more than I was even allowed to ask. So I think there's a lot of these kinds of things that are happening that, as long as we can create windows for them to operate and give them the voice and the platform, then I am truly optimistic that we have created the spark of a really large revolution.
I like that. I'm actually writing a children's book right now on impact investing. It's all about children asking why. So that is it's a good theme. Karim, we have 2 minutes left. Would you like to finish us off? And then and maybe you can slide in something about the courses, which is what Steve was going to do in the last 2 minutes.
Sure. Yeah, and I think I'm, maybe like others, a critical optimist as Morgan, I think we're saying. If I just look at our participants in our courses, right? They're all coming in much more informed, more critical, more committed, and have a higher bar on what good enough looks like. And I think those are all really good signs, because the Monday after the course, all of them are doing things directly in their organizations. We see also, a good number of them often change jobs because they realize the organizations or the environments that they're in are not aligned with the aspirations and things that they are particularly excited about. So I think on one hand, the bar is getting higher around what people are willing to settle for in different kinds of organizations. They're much more informed. They want to matter. They want their organizations to matter. And I think all those are good things. They're all positive things. I think that the flip side maybe is that we do a lot of talking to ourselves in these spaces. I still think that happens more than we'd like to kind of believe. We also then need to hold capital and other organizations that are doing things that are not good for people and planet accountable. And I think, whether it's AI or just being able to have different kinds of technologies being applied, we're going to have more information. We're going to have opportunities to be able to think about these questions of, is it good? Is it bad? Who decides? What are the different explanations for which something may be considered good or bad? How much information is enough? And I think that's all great, because in some ways the kind of space around how we make judgments on what impact is going to be much more open-ended and will be hopefully more democratized recognizing that that's not always the case just on its own. And I think that's what we try and teach in our courses. You know, a lot of them our courses are based around these fundamental questions, asking why questions before you ask the how questions, being thoughtful about both positive as well as negative effects from investments, and thinking always about how you can manage and improve impact, not just measure and report it. And so I think all those, we've come a long way in the last 15 years, but the next 15 years, I think, are going to be even more exciting because those are now our starting point questions. And I think we'll have much better answers 5 years from now rather than having to wait 10 or 15 years. And yes, we have to move much quicker than I think we currently are, but I'm excited because if I look around the rooms that we convene, I think the people are already doing it. They're not just talking about it.
Excellent. Great. Well, I would just like to close by saying thank you to all of you. And for those of you on the call, if you want to have more deep conversations like this, come join us at Oxford. We have 4 different programs. The speakers on the call have all spoken on different programs of mine, at least in the past. And we have high quality caliber conversations like this, and deep dives and provocations, because it is not necessarily about just where we are, but really about where we're going. So we'll be sending it out. I put a couple links in the chat. We'll be sending out more in the follow-up, but thank you to all of you. You have been incredibly instrumental to where we're going. And I really deeply believe that you will all be very instrumental into where we should be going in the future. So thank you for your work and for all of your contributions. We really appreciate it. Oh, I will, just close on Michael's point where he thinks that the future of impact investing requires wisdom, transparency, honesty, and integrity, which I think is our lovely words. So thank you, Michael, for finishing us off on that. And we will hope to see all of you very soon. Have a great rest of your evening.